Welcome everyone to the Payments Canada Summit, and thanks for being here today. I'm Maggie Smith from Payments Canada, and I'll be your host for this session today, where we'll be diving deeper into how we can level the playing field when fighting against financial crime, and the different types of tools and techniques like artificial intelligence and machine learning that can be used to mitigate the risks associated with financial crime. Before we get into introductions and our discussion for today, I want to remind the audience to please use the chat box to send us your questions, and we'll try to save about 10 minutes at the end to go through and answer as many as we can. So let's get started with introductions to start us off, and welcome to all my panelists today. Chris, let's start off with you with a quick introduction.
Thanks very much, Maggie. So my name is Christopher Phillips. I'm the Senior Vice President of Corporate Functions Technology at Royal Bank of Canada. And amongst other components like risk and HR, my portfolio covers financial crime. So many of the things that you touched on, Maggie, are included in that, including anti-money laundering technology, fraud technology, and trade compliance technology. So looking forward to the session today to share thoughts.
Thank you, Chris. And Karim, over to you.
Great, thank you very much. I am Karim Rajwani, Senior Vice President and Chief Operating Officer at Scotiabank in their Financial Crime Risk Management Program. I've worked at other European institutions and even Canadian institutions. I've been in this space for about 20 years.
That's great. Thank you, Karim. And Nuno, certainly last but not least, over to you.
Thank you. Hi, everyone. I'm Nuno Sebastiao. I'm a co-founder and CEO at Feedzai. And what we do at Feedzai is we're the cloud platform to manage financial risk and making sure that consumers have a pleasant experience while they interact with their banking and financial services products, while at the same time avoiding fraud and financial crime to happen and to occur.
Perfect. Thank you very much. So we've got a great group of panelists today to dive into this really interesting topic. So without further ado, let's start off with Chris to get your thoughts on how machine learning is advancing the risk and financial crime management space and how big of an impact this is having, machine learning in particular is having right now.
Great. Well, look, I'm going to take a particular example in fraud technology. So I think up until a few years ago, really, the pattern in fraud technology was really rules-based. So using human experience to develop these rules. And as artificial intelligence became more consumerized within the banking industry, it was quite clear that there was an upside. And so we started to really see a use for it, certainly in compliance monitoring around queue prioritization. That was really the first place that we looked. And if you think of it like with rules-based intelligence, you're going to get a huge number of false positives. But by supplementing that with supervised machine learning, you can really improve the prioritization of alerts as well as find additional patterns. So that's really the first place that I would say is a good place to start because it will move you into a lot more pinpointed accuracy with the whole area of case management. So numerous other examples I'll talk about in the talk, but that would be the first one I'd highlight.
Okay, thanks, Chris. And Nuno, was there something that you wanted to add to that?
Yeah, so I mean, I'll actually start with the stat that I got recently. 96% of all transactions last year were online. And that contrasts with what happened historically for all the reasons we know. And 93% of the fraud committed was also online. But the way we look at it as a vendor is not so much, it's mitigating the risk on one hand, but probably as important and more important than that is if you think about the problem of the false positives. This is where machine learning really helps, is understanding in all this new online world how you apply these machine learning techniques to ensure that false positives are not there and essentially reduce fraud, more importantly, while reducing friction with customers. And this is the way I think everyone should look at it, is how do we look at in the context of the consumer and focus on the consumer experience when thinking about fraud and keeping the customers at the center of the model that we all build as an industry. Second factor authentication, call centers. I don't know of any consumer that wants to deal with any of that. And what I think that we do well together as a community of practitioners using machine learning is making sure that the removal of friction is there, but the safety is also there. And that's where I believe machine learning can really be important going forward.
Oh, that's great, keeping the customer at the center. And Karim, what about from your perspective?
Yeah, we'll talk about the challenges, I think, a little bit later. But AI and machine learning have huge opportunities in the financial crime space. As Chris mentioned, traditional rules-based systems are great. But as we've seen in the industry, it's a needle in a stack of needles. And this is where more advanced techniques and technologies really come into play. We've already talked about the huge value from an efficiency perspective, but I think there's also the effectiveness angle, is to find the stuff that truly matters, find the unknowns, right? And that's sort of one of the biggest challenge. What is it we don't know? And letting the data tell the story. Traditional techniques they're rule-based, based on known money laundering techniques and topologies, and that's what you focus on because that's what you know. I think this gives us an opportunity to sort of look for stuff we don't know about or we're not quite focused in on, and really sort of diving into the data. As we move into the digital space, into the cyberspace, payment modernization, digital currency, cryptocurrency, this becomes particularly important, right? Because you're going to have real-time payments, means real-time fraud, greater cyber laundering, greater cyber crime. This is where we need techniques like AI and machine learning. We've used natural language processing. We've used AI techniques in human trafficking, child sexual exploitation. So it really does open up the space for us to look into areas traditionally where we've not been able to. Now, there are some challenges which we'll talk about in a minute.
Mm-hmm. That's a great lead into the next question, Karim, as we're seeing lots of changes, certainly in the payments ecosystem with payments modernization, with real-time payments, and with all the new players that are coming into the payment space. So if you can dive deeper actually into what the challenges you see from an AML perspective, as well as any particular risks that the industry should certainly be very cognizant of.
Sure. I mean, the countries that have gone through payment modernization have seen a massive increase in payment volumes. And that's a good thing. We're making payment channels available to the masses. The cost of moving money is dropping significantly. All of that is a good thing. With an increase in volume of payments comes an increase in alert volumes, right? That's a given, and we are already struggling with alert volumes with monitoring. So that's something I think we need to be cognizant of. As Nuno mentioned, there's a massive amount happening online: cyber laundering, ransomware, cybercrime, and that'll continue to sort of increase as we move to real-time payments. We are getting new players into the market. Unclear, how robust their financial crime management programs will be. And as an industry, we're as strong as the weakest link. Another area, the travel rule in Canada, compliance with the travel rule is critical. And what becomes really interesting is when is an international payment not an international payment, right? This is sort of what the industry is struggling with, and we can sort of get deeper into that. Transaction laundering, with fake merchants in the US alone is a $60+ billion industry annually, right? So, as we move to real-time payments and payment modernizations, I think we can expect the problem to grow, not come down. And as we have, high frequency, low value payments, this is probably one of the most difficult areas to monitor, at least from a money laundering perspective, right? You're looking for patterns, you're looking for large movement of funds, right? traditional money laundering. Here, it's a transaction at a time, and low value transaction, which is incredibly difficult. So we've got to rethink. We've seen the impact of COVID on, fake PPP, medical equipment, government assistance loan fraud. So certainly the criminals are taking advantage of that. And then as we look into the fraud, well, if we move into real time, our fraud monitoring is going to get far more sophisticated.
That's great. And it's a good note to transition over to you, Chris, for your perspective from more of the fraud lens.
Yeah, I mean, similar thoughts. I would say that similar to Karim, like you've got to have a resilient architecture and readiness for real-time payments when it comes to your fraud pipeline, and not really develop it by project, but develop it as a platform. So having great event streaming technology, things like Kafka, going into supervised machine learning, but also recognizing that actually you don't want to just chuck away all of the knowledge that you've got on rules, and you want to develop that alongside. I think, as well as the supervised layer that many financial institutions are now starting at, is also looking at the anomalies outside the norm and starting to develop practices around unsupervised models as well. And also just making sure that you've really closed the net on all the channels. It's not enough to just get it right at a branch level or within digital. You've also got to look at things like contact center as well. So, but I think if you get the architecture right, it will be relevant and ready for real time. And then just picking up on the AML point, I agree, Karim, that I think that some of the elements of real time will actually assist that, particularly in things like ISO 22 format and some of the issues that you were talking around in terms of traveler rules. So looking forward to that. I think on the AML side, as well as some of the areas that we've been talking about so far, I see a massive upside for using social network analysis, particularly in some of the smaller volume amounts that Karim was talking about. And ostensibly in Canada right now, we know the kind of the gorilla in the room when it comes to AML is on the regulatory side, and making sure that all of the banks are good with all of the new rules coming in. And we've just mentioned one here today around the traveller rules. So they're very much linked in terms of the direction of AML and fraud, but there are some specificities, and hopefully that draws a couple of examples out.
That's great. Thank you, Chris. And Nuno, what about from your view as a vendor in the financial crime space?
Yeah, so I mean, there's a lot of let's say to unpack, but let's focus on AML. AML used to be historically purely offline, and I would call it a paper-based exercise with things like faster payments or real-time settlements, like Chris was mentioning. That is not the case anymore. And with all the regulations we've seen, from Australia, Hong Kong, Europe, North America, US, Canada, AML is now much more than a transactional or a technical process. And the key question is, how do you automate all that process and still solve for the request of the regulators, the request of compliance, and all those things. To me, it comes to a simple thing. It's continuous validation at a transaction level, account level, individual level, and whatnot, and then linking it all together. I mean, a story that if you guys allow me to share. Many of the onboarding processes created by challenger banks, they're hands off. It's kind of like it's automated, right? You get a with a fintech, or you get a bank account that you can fund immediately, right? And the regulations, it depends on regions, but you only have to inform the regulator above $10,000 or 10,000 pounds or 10,000 euros. The challenge is, and Karim touched on it, is what happens one of those customers that only transacts $5,000. That's not going to break the world or the bank from an AML or a money laundering perspective. The problem, and we've seen that, is one individual opens 20 accounts, fake accounts, $5,000 each, right? And that he bought, fake social security numbers and whatnot. Then, 10 of those individuals open another 20 accounts. All of a sudden, we're talking about hundreds of thousands of dollars. You multiply that for a year or for even a month, and you have millions being moved around. All of them very small. Technology enabled. If they would have to physically walk into a physical store or a branch to do that, like in the old days, that would be costly. You need mules. Today, you can orchestrate computers to do this. And this is what I believe as was being that machine learning. And then the combination, and there was a question that on the chat that asked about that. We call it a layered approach. There are some things you'll catch just by simple rules. Is a social security number complete? Is it valid? Is it in some, list of compromised ones? You can use that. Another one is some of the regulations that, some of the rules that are implemented. But then you use supervised machine learning to go one step above. You can still explain to an auditor what's going on. And then you can layer another one, as Chris was mentioned, the so-called unsupervised one, which it becomes a little bit harder to justify, and I think we're all aware of it. But then we can say, well, but that can potentially help me understand unknowns. We have seen in a particular case that systems have been operating and conducting fraud, and they went undetected for months or even years because they were on the fringes. They were using small amounts that no one would look at. Technology, the same way it enables this to happen, it also enables us to catch them. And that's what we see as a vendor without putting burden on the consumers. And that's what we're, together with our partners in all the regions and here as well, that's what we're putting to work. And Chris also mentioned, it has to be real time. It has to be in line. It has to be continuous. And to look at as much as data as Karim, this is a data problem, is to look at as much data from all the different aspects that we can use to understand what's going on.
Just if I can make a couple of comments. One, that there's a question, do you use a hybrid approach, i.e. traditional with more advanced? And I think it's what is the problem you're solving for, right? Often AI and machine learning is a solution looking for a problem. So, if you've got a traditional rules-based system, you're not going to rip it out to say, I'm going to go get the latest and the best thing. All right. And because the place is changing too quickly, and you can't afford to rip out last month's technology with the latest. So if you've got a traditional rules-based system, then you're going to use more advanced techniques to one, reduce the noise, two, improve the effectiveness, and then three, look for the unknowns, where traditional techniques will not find the unknowns, right? The outliers, the anomalies. But also there are areas where rules-based systems don't work, right? Trade-based money laundering. In the market space, rules-based systems have not worked. They're weak in traditional banking, but in the market space, they've not proved to be successful. And those are the areas where I think there are huge opportunities not to go for traditional approaches, but begin to use more advanced techniques, right? That's not a question of rip and replace. Traditional techniques have just not worked, and many institutions don't use traditional techniques in those spaces. This is where sort of the new techniques come. And there's another area we touched on. We went from transaction-centric to client-centric. But if you look at the big cases, right, the large money laundering cases, the laundromats of the world, those are network-based problems, right? And you can't solve network-based problems with rule-based systems. You've got to have network-based monitoring.
Thank you, Karim. And I think there was a lot that was mentioned there in terms of leveraging machine learning and AI to be complementary to existing practices, but being able to also leverage it on its own in areas where rules-based or historical practices really haven't worked. Nuno, I want to dive into a couple of things that you mentioned, and we'll get into the unsupervised machine learning a little bit later. But first, I want to talk about an approach that Feedzai is certainly focused on, which is the importance of having a really responsible AI approach. Can you tell us a bit more about what that means and why that's important?
I can, and thank you for bringing it up. I'll start with a story. These systems, they make decisions for consumers, right? So we need to ensure that they're applying good judgment and that we understand what's going on. So this fair band, this innovations we're bringing to market, they deal with that. There's a very known case in North America that was made public last year. And Tim Cook, the CEO of Apple, even mentioned it recently. There was a big, let's say, brouhaha last year because Goldman Sachs, who is the issuer from Apple Card, was accused in the media, public information, of, let's say, discriminating the second card holder of an account that was applying for credit in a household. And it so happened, so basically the second card holder was being given a lower limit. And it so happened there was a strong correlation, 90% plus, of the second card holder being a female. So they were accused incorrectly of gender discrimination. Nowhere in the system that was there from what was publicly disclosed, but because there was a correlation of the second card holder being female, it was thought that it was discrimination at play. Far from it. And Tim Cook publicly said in their last yearly event that they are going to do account opening different. They're going to apply new techniques. Let's see what they do. To me, the key point is this was an issue of bias. This was an issue of model bias. And this is one of the problems we as an industry and we as a vendor really care about, which is how do you remove bias? And there are conscious bias that we as people put in our systems as we are developing them. It's sometimes our experience can be a bias. But more importantly, the more subtle ones are the bias that come from the systems that pick up what's called uncorrelated variables. And for instance, we, in a recent case study that we applied in a customer where we deployed this fair band, we found that there were close to around 1,000 people per month that were being unfairly denied applications. And then if they would, let's say, escalate it, then manual reviewers would pick it up. And what we understood, it was that everyone did everything with the best of intentions. You can have this type of biases in rules as well. So it's not something that is exclusive of machine learning. But in machine learning, it can actually augment itself and amplify itself. And this is one of the big problems, that every vendor and every user of this type of techniques needs to be aware. And that's, we're very happy to have some of the leading researcher, academically in this area and putting out innovations that deal specifically with this. It's important for people because also regulation and regulators are looking at this problem of fairness or model bias very closely. So, for the audience, I would recommend that look at it. Do your homework in terms of how do you explain what's going inside your models and how have you validated your models against biases, conscious or unconscious. Okay.
I think bias is a really big and important thing there. And Karim, I think you had some thoughts that you wanted to share on that as well from what you're seeing in your world.
Yeah. So, as we move into sort of the AI, as Nuno mentioned, the biases get magnified. So you've got bias in the data, right? You've got bias with the model developers, and then you've got bias in the model. And as institutions, we've got to begin to think about how do we make our models fairer, that don't discriminate, based on gender or sex or ethnicity. And we've got unconscious bias, right, of ourselves. So all of these are issues that I think we need to begin to think about. Regulators are definitely, thinking about this, and that's something we need to think about.
That's great. So I want to dive deeper into something I think you've all mentioned so far, which is unsupervised machine learning. So Chris, I'll send this one over your way. So machine learning, unsupervised machine learning is certainly gaining traction when it comes to dealing with emerging threats and things that may have been unseen before or undetected. Can you dive a bit deeper into the particular benefits that unsupervised machine learning can provide, especially in this fast evolving space?
Yeah, look, I think it's certainly going to be the third leg of the defense mechanism in fraud technology. So the foundation was clearly around rules-based technology. We then, saw the institutions move into event streaming with supervised machine learning, and the third piece is clearly going to be unsupervised, which many financial institutions are moving into. And why is that? It's because you really want to be able to keep up with the threat matrix that's really out there, and things move quickly. So if you want to, for example, look at anomalies outside an individual's pattern of behavior norms, let's say they're using a particular device at a particular time, or they're going from a location that's outside the norm, it's a great use case for picking that type of thing up. And so I see it as a complementary strategy to the two other layers, which are rules and supervised, fed by event streaming. And I think honestly, it's about looking at your overall amount of fraud or risk that your business is prepared to accept, and really that 3-pillar model gives you all of the building blocks, I think, for an effective architecture against that. So I would encourage people to look at it, and it will pay dividends, sure.
That's great. Thank you, Chris. So I want to shift a little bit more back to AML and back to you, Karim, to talk a bit more about your thoughts on AI and the role that it can play within AML. And in particular, I want to look at the constraints that might be out there in terms of either from a regulatory perspective or a technological perspective, or anything else that you're thinking would be a constraint in the space.
Sure. So I think, the biggest issues, one, we've talked about the bias, right? That can become a significant issue and a barrier and a reputational risk for the organization, right? Chris mentioned the secondary credit card. You can have, certain minority groups in certain postal codes. So I think we've really got to be careful in terms of developing AI-based models. We already have those risks in our traditional, but as Nunzio mentioned, when you let the machine make the decisions, it may learn from itself and may just magnify the problem significantly, right? So that is key. Institutions are beginning to write standards on developing AI models, making sure AI models are fair and ethical. So this has got to be part of your internal standards and policies. OSFI is already beginning to think about that. The next area is from a auditability perspective and model value perspective, right? It can't be a black box. It can't be trust the math or trust the machine. That will just not pass it, right? It's got to be open. It's got to be transparent. It's got to go through the same rigor as traditional model development techniques, right? A model validation, below the line, above the lines testing. None of those go away. They become even more important. Training and education. Particularly with your modeling teams, this has got to be a conscious effort, right? It can't be, we've got a policy and that'll take care of it. No, it's going to be a conscious effort. It's got to be followed up by training, and then at the end of the day, it's data. completeness of data, accuracy of data, the integrity of the data, and then consciously thinking through what biases could there be in the data, and making sure that you think about them, and then as you develop your AI and modeling techniques, that you factor those in. The other thing to think through is institutions have a number of different solutions. You can have traditional rule-based, then you have analytical solutions, and then you have AI solutions that sit on top of that. How do these work from an end-to-end perspective? How do they interact? So your testing and your validation and your auditability has got to be an end-to-end. It can't be a siloed approach.
That's a really, really important perspective to really hit home. Nuno, what about you from the vendor view?
So I as a vendor, I sell technology, but I also caution people against the, let's call it, no pun intended, the unsupervised use of technology. So what do I mean by that? It's really important in any area, and I think we went through the largest experiment of applying machine learning techniques to large-scale data sets in social networks, elections, and we all saw how that was gameable, right? You could influence some of the outcome on wider perception just by playing against the feedback and the echo chambers in such social networks. So to me, there are three parts to this problem. One is technology. Technology has today and will continue to have advances like real-time, machine learning, supervised, unsupervised, fairness, ethics, all those things. Technology provides that. Technology without domain expertise. I could say as a vendor, forget about domain expertise, technology is going to solve everything. It won't. You need to have the domain expertise in charge of such technology on the vendor side and on the user side to ensure that what's being deployed is sound. So that, to me, that combination, it's really, really important. Technology, domain expertise. And also then if we have the domain expertise of the technology, you can work with constituents, you can work with regulators, you can explain even to consumers what this means, right? And then there's the third, let's say, stool or leg of the stool, which is the users of such technology. And sometimes I don't hear them being mentioned in these forums, which is the analysts, the people that have every day to look at this technology that we produce, and the fraud analysts, the people that have to make a decision when a case is brought up saying, does this go through or doesn't go through? So how do we equip them with the tools, the visibility, so that they can decide faster or escalate or call the person, call the consumer, and the domain expertise? So we, as a vendor, also put a lot of focus on the analysts and ensuring that they're focused again, and I come back to the consumer and what does this mean for the consumer, but ensuring that they are equipped to do their jobs. We've seen, and I know we're talking to an audience of practitioners. We've seen horrendous call centers where people have to switch between legacy applications, and then they go to the CRM to see the customer. Give them a view, give them a mechanism where they can navigate the graphs, the data graphs that Karim was talking about. This is a network problem. Today, all analysts still see things in a spreadsheet format. It doesn't work anymore. You need to go past that. So, and if you then address all of these, the amount of timing you save, but it's not about saving time, it's about how do you enable all the people. You have the analysts equipped, you have the regulators equipped, you have the domain expertise, all of them enabled by the technology that's being built. That's, if I can, speak to the audience, that's what I would say to people to think about whenever they're considering adopting, and what's the strategy for risk management in today's and tomorrow's world.
Mm-hmm.
If I can interject and back up Nuno's piece on this, I think that's absolutely bang on. You've got to look at the the use of these toolings through the eyes of the real users. For example, the fraud center agents. This isn't some glitzy corporate center, hey, let's just put AI in. It's actually looking at the problem, for example, that these guys have traditionally had in terms of false positive management, and actually equipping them with a pipeline of which AI happens to be a piece. But there's also other pieces. You've got to make sure that you've got a modern day UI in place. You've got to make sure that you've got great data flows. You've got to make sure that there's completeness and accuracy. But looking at it through the eyes of the external consumer, but also the internal consumer, which is the teams looking at case management. I think if you look at it from that angle, you're much more likely to be successful. So I think it's a different way of thinking through the architecture. And then to Nuno's point about domain expertise, again, I couldn't agree more. And it's about having your technology function partnering with a domain group of functional experts in fraud that have also got embedded within them some data science professionals. Like, this isn't some big science experiment. This has to be linked to both the agents on the front line as well as people with the domain expertise. And it's easy to get that wrong, but if you get those two ingredients right, I think you'll be much closer to the finish line faster.
Mm-hmm.
Yeah, there's a couple of questions in the chat. One is about, does Ventrac have the same data biases in STRs? Probably. STRs are submitted by financial institutions, and if we assume that we've all got biases, whether we use traditional techniques or more advanced techniques, but remember, our modelers, our investigators, we all have unconscious biases. I think what Ventrac does have, however, is STRs from many, many, many institutions. So as it begins to look at a major case, hopefully they've got enough data points from enough financial institutions to minimize some of the biases. Having said that, you can't eliminate it. So, any organization that has vast amount of data and then uses traditional or more advanced techniques still has to be conscious about the biases that can occur. And the second question is around, the rationale for filing STRs and the black box approach, and would we show the algorithms to Ventrac? Well, one, if it's a black box, it just doesn't get into the organization, right? If it's trust the system, trust the math, it generally doesn't even get onboarded. Before any models, whether they be traditional or rule-based, go live, they go through a rigorous development cycle. They go through rigorous testing. They go through model validation, and they go through a formal committee approval process, at least at our institution, right? And well before audit, or well before Ventrac or any other regulator reviews it, those things are reviewed by our internal audit. And yes, if any regulator says we want to see the algorithms, we want to see the audit trails, we must have them, and we must be able to produce them and explain them.
Well, that's great, Karim. We will circle back to the questions in a couple of minutes too. But thank you for your perspective there. I have one more question that I just want to ask, and I'll start with Nuno on this one. So Nuno, we certainly have some very big FIs in the room today with RBC and with Scotia that are part of a group of companies that are certainly investing in future-proof technologies. I wanted to ask you, what about the rest of the ecosystem? How well prepared are small to mid-size FIs in terms of dealing with the complex threats in the financial crime space?
It's something that I've been thinking a lot, and then how do people compete, right? How do people innovate? And the way I see it is, in thinking about all these fintechs and challenger banks, here's a reality. Today, you can buy a core banking platform and have it run out of the box, cloud-based, in a matter of months. And we've seen experiments of either startups that are backed by investors or banks that are sponsored by large financial institutions, and some of them as our clients, where in 9 months they go from starting, let's build a bank, to actually start issuing cards without actually owning any servers, 100% cloud-based. And what we see is that if you think about fintech, before there was the bank, right? Today you have APIs, and you use applications to buy your stock, use another application to send money, use another application to pay your friends, use another wallet. All of them are connected through different, to this tissue, this API layer. So to me, is about, you have to focus on making technology accessible for all the different players. The requirements are different. So we have something, for instance, we call Feedzai solutions, and that is out of the box, packaged. You don't get all the bells and whistles and let's say configurability, but it's out of the box that allows you to start working really fast, and that's what cloud enables you. And there's this author, Chris Skinner, that published a blog, and he says that this is not going to work, that FIs, these new banks are kind of going to cannibalize startups and they're not going to succeed. I actually disagree. We've seen in our exposure throughout the world, some of the speed at which some of these challengers, either sponsored by banks or are acquiring customers in a cost-effective way, and here's the key, in a cost-effective way, it's surprising. Let's see, what the future holds, but I think it's, technology is being democratized, is being made accessible to small fintechs. And here's some stats. Well over half of our clients are all cloud-based, big and small. In the last 12 months, 80% of our clients, of our new clients, cloud-based. So, and we're working with regulators in many regions to move and to support the clients to move from on-prem to cloud. So, I don't think there's a better way to talk about democratizing technology access for the benefit of the consumer. And we certainly play our role in making sure that the technology that we built is accessible to everyone.
Oh, that's really great. Really a big step towards leveling the playing field in this financial crime space. Chris, was there something that you wanted to add into that?
No, I'm good. Thank you.
Okay. And Karim, any last words before we jump into the questions?
Nope.
Okay, great. All right, so we have received a couple of questions, and just for the audience, if you have anything else that's on your mind, please don't hesitate to add it into the room chat, and we will try to get to it within the next 12 minutes. We've touched on a couple of the questions already, but I just want to put it out there in case there's anything that the panelists want to add. So the first question that we have here is about a hybrid approach of machine learning and hard-coded fraud detection rules. So do you find that using a hybrid approach is more effective than pure machine learning?
I think, similar to the conclusions, within our own institutions that Karim mentioned as well earlier, I think it's a combination of the historical intelligence that's been built up on rules-based and some of the more simplistic rules, coupled with supervised and then enhanced with unsupervised. I think that honestly is the right model, fed in by a resilient data pipeline that's got the appropriate data quality controls and completeness. I struggle to think that you can kind of pivot to one method. I think it's a combination of those, and then thinking it through the eyes of the fraud center agent or the AML case management. And making sure that these aren't just random pieces of information, but they come together in a common pipeline with a well-organized UI layer. So, yes, the answer is I do think it is a combination of those. I think that is the right direction, personally.
That's great. And I think, Karim, you had already spoken about that a little bit in terms of where it may work well to use both. It may work well to use one, but a lot of complementary pieces in using both. The next question, Karim, I think you touched on a little bit already, but I'll just read it out and see if there's anything else that anyone wanted to add. So wouldn't Ventrac have the same human bias problem in receiving and analyzing STR reports generated by FIs? Is there anything else that anyone wanted to add for that one?
No, I mean, as I said, anybody with a vast amount of data and has, modelers on it or uses AI type or advanced techniques has the same risks in terms of bias. Obviously, the more varied the data pool, it negates some of the risks associated because you've got different biases, and hopefully collectively, that there's a lower risk, at least in the STR data.
Okay, great. And Karim, you already answered this one from the Scotiabank perspective, so maybe I'll put this one over to you, Chris. On Ventrac requires a detailed rationale in a STR report. How can RBC create such a rationale if using a black box algorithm? And do you show Ventrac your algorithm, which the black box is changing on the fly anyways?
Look, I'm not going to get into how we handle specific regulators, but what I would say, similar to some of the thoughts that Nuno talked about and Karim mentioned, is that any financial institution needs to take model risk management seriously, right? So you can't just run these things as a black box. The explainability is important, and it's not just from a regulator perspective. It's around, ethics, fairness, internally having good documentation on it. And that has to be, equally as important as the build out of new modeling capability.
Okay, great. The next question that we have here is, with the increased use of AI and machine learning in financial crime detection, do the bankers see a value in not so much sharing data consortium, but sharing indicators, features, signals, etc., to apply to their own data? As it relates to the previous question, the idea of sharing the contributors to the algorithm. That's a long one.
Sorry, Karim, I was going to very quickly say, I think you've kind of got two lenses here. You've got the internal sharing of negative markers between different parts of financial crime, whether that's the link between AML and fraud as one example, and cyber, and sharing those negative markers. And there are many that you can pick up on. They could be particular named individuals, they could be phishing attacks, so you name it, there could be device information. So it's the sharing between those different capabilities. And then and there's already consortium data in terms of external markers as well. So I do I do think the sharing of those markers in terms of internal and external is good, and not to think of any particular branch of financial crime as siloed. I mean, they are disciplines in their own right, absolutely, but yes, they benefit from sharing data.
That's great. Karim, was there something you want to add?
Yeah, agree with Chris. There's real value in sharing indicators, and we see that happening all the time, right? That there's no privacy breaches in terms of sharing techniques or indicators across the industry. We can only learn from each other and look for common indicators, right? That just goes to develop better models. But also, I think there is value in sharing data and having a consortium-based monitoring. We're not there, in the fraud world. Yes, and a couple of countries in Europe, they've started transaction monitoring based consortiums. But the value is, if we say the big money laundering is a network based approach, a network requires multiple financial institutions, right? The Russian laundromat was over 7,000 accounts, right, in a couple of hundred banks. No one bank can solve a big network problem. So there's real value in network-based monitoring. But also from a model's perspective, the bigger the data set, the more diverse the data set, the better your AI-based models will be, and you minimize some of the bias risk in at least the data. So my personal view that is definitely the path forward.
Okay, that's great. Yes, sharing to fight against to present a united front to the criminals that are out there. Nuno, was there anything that you wanted to add to that question, that response?
Yeah. So I mean, I think here's what we've seen across all the regions and across all our clients. The big benefit comes from having elements, so-called data pools, that are shared among everyone, and we see them regionally. We see some of them more global. We see some of them local in some of the countries that we work with. In Europe, for instance, processing is typically done at a central level by one organization that is kind of owned cooperatively by the banks, and we do that in a number of European countries. And what we've observed is because there's a balance you need to strike. One, data privacy, very strong in pretty much all the regions. So I cannot share, your name, your balance and whatnot with someone else, let's say in Europe, as an example, right? So how do we deal with that? So it goes in layers. Within an organization, one FI, it's really important. Share as much you can. Share from the card department in the bank with the AML, with the online. We still see situations where that's siloed. So that needs to end. That's what Chris was talking about within the organization. Then share as much as is possible and good to share without compromising, GDPR or Data Privacy Act or whatnot. But then more importantly is, and this is where we see the real value. The value is in what we called, and I think it's mentioned in the question, they call it indicator. We call it profiles. The patterns you observe in a region or in a bank or in an area, that while they don't identify you as a consumer or you personal, they say this action and that action linked together. It's actually, we've seen it being bad behavior elsewhere. And this is how you deal with the network effects that Karim was talking about. It's early days there, but I believe what machine learning is bringing to the table is the ability to derive more value from the signals than from the data instance. Because data, someone said to me, data is like rotten fish. It ages really bad. So if someone tells me I've got 1.6 billion device fingerprints, my immediate counter answer would be yes, but 70% of those have not been used in the last 3 years, so they're useless. Mm-hmm. Right? So then you just have a data deluge. So it's the balance between all these elements of, again, to summarize, internal information within the bank, share what's available and what can be shared, taking into account data privacy among organizations, and then augment all of that with all the profiles, all the measurements that you've seen that are not PII bound.
Okay, great. Thank you, Nuno. So I think we have time for one more question, and then we'll wrap up for today. So the next question that we have here is the dependent variable might suffer from selection bias. There might be a certain type of fraud that is never identified. How do you deal with that in machine learning?
I can take it. How we do it. You struggle, you iterate, and you have models retraining themselves and picking up for unknown elements. But it's a continuous exercise. But for instance, there are machine learning techniques were specifically built to go after unknown or unforeseen variables. So for instance, we have something that we call AutoML. And what AutoML does in technical terms is what's called feature engineering. It basically does combinations of pretty much everything with everything. We know that most of them won't make sense because it's just, it's a dumb combination. There's no correlation between your first name and my last name, as a stupid example. But by doing that and then going after variables that might correlate with potential risk, you do find features that you have not thought before as a human, as an analyst. And there's an entire machine learning area that only deals with this, finding the unknowns in your data sets. And we're looking at it, and I'm pretty sure other organizations are as well.
Well, that's really interesting to dive into that. Well, thank you all. We are at time now. Thank you all for your participation today, and thank you to our audience. It's been a really great session, and I certainly learned a lot about how the different types of methods, AI, machine learning, and the traditional approaches can really be combined in a hybrid way to address risk. And it was really interesting for me to also hear how much people are such a big part of this, whether it be your internal teams, making sure they have the right expertise and knowledge and building up that experience and not burning them out with diving too deep into all the false positives, but also the customer being at the center of all that's being done in this space. So thank you to you all again, and thank you to our audience. I hope you all enjoy the summit and enjoy the rest of your day.
Great, thank you.
Thank you.
Bye.
Thank you, everyone.